It's great to have you on the show today, and I want to first of all start by getting your thoughts on that point, the fact that many people are saying very few catalysts left this year. We only have, what, about 6 weeks left. We know that in December, the market kind of shuts down because of the festivities. Your thoughts on where this market can go from here?
I don't think it's going to go up. I think it's going to be stable or maybe go down. People take profits, they raise money for the festive period, and we don't see any big news items coming through like PIB or the budget being passed in the next couple of weeks. So there's nothing to really push the market forward.
I guess that PIB discussion is very key going into the oil sector. We'll get to that in a moment. But so in this context, how should investors play the market? And one point I think is very important to make is the fact that we're seeing now very moderate trading. And there's still the argument that there is value, particularly in the banking sector, but we're seeing moderate, very moderate trading. It seems like a lot of people are still waiting on the sidelines.
Yeah, I think there are good results from the banks in Q3, but I think a lot of analysts are looking at that as from where they're coming from 2011, you always expected good results. Now going forward, I want to see what the year-end results are going to be in the financial sector. I think in other sectors, we really haven't got the retail sector back into Nigeria. I mean, they've tried with the market making, foreign investors are still coming in, but until we get the retail sector back into the market, we're not really going to see that push, sustained push going forward.
What about the IPO market and how key that is for you? To confirm that this market is finally back, I was speaking to Oscar Onyema last week, and he did suggest that there's an expectation that by 2013 we could see the IPO market back. Your thoughts on that?
They've done a lot to cleanse the IPO and private placement market from what the abuses we saw in 2008 and before. But I think for real push the IPO market, we need to start getting some of these big oil companies and telecoms companies to do IPOs. Right. And I think it goes back to what I've always said. Any company that's listed in their home market, MTN and co, they should list in Nigeria as well. Because if they list in their home market, they have nothing against listing. So why aren't they listing in a market like Nigeria, which is one of their biggest markets? I think until we push those companies to come and list in Nigeria, same as the old market, so Nigerian investors can take part in their growth, we're not going to see a big push in the IPO market, and that's all push we need.
I'm sure we'll see that discussion going into next year. But let's move on to the President's address yesterday, and very interesting media chat. Few major takeaways for me. The first one is the point about the fuel subsidies and confirming that next year we won't see those fuel subsidies removed. In fact, indeed, we do have those fuel subsidies in the budget for this year. I think well over 900 billion has been allocated. So how comforting do you think this is for the markets? Or is that a good thing or a bad thing for you? Because a lot of people talk about the fact that we really need to take out these subsidies to cleanse that sector.
I think there's kind of an informal agreement between the president and the nation. The nation is saying, we want to move fuel subsidy, let's clean up the oil sector.
Right.
And so
that process is still on.
That process is still on. Until that process is done, you can't move the fuel subsidy. But I think the key thing to note is the president did not say the fuel price will not going to rise. Because they have a subsidy of 1 naira. It's still a subsidy. So it depends. So the subsidy might be decreased. And the amount put 971 billion for the fuel subsidy in 2013 budget is a bit larger than the 550 for the 2012 budget. But if it's for over 12 months, that could suggest that fuel prices might go up. So there will be a subsidy. He said that, but he hasn't said that the fuel price will stay where it is now.
Well, we'll wait and see how that plays out. Another very important point I think he made yesterday was about the Manitoba contract, very key contract for the power sector reforms. He's confirming that it hasn't been cancelled. It's something that they're still looking at. I think something along the lines of due diligence. So your thoughts on that contract and how crucial it is for the sector? Because if we see that contract cancelled, some people suggest that it's like taking us back to the drawing board with the power reforms.
That contract is key. The transmission network, you can generate as much power as you want. If you can't transmit it, nothing will happen. And it was always obvious there was going to be issues with the transmission contract, because if you look at privatization, if you take away the NIPP projects, which is still under government control, transmission is the only area where procurement still happens in government. If you take the discos that have been privatized and everything else. So anti-reformers were always going to focus on that. Yeah. I think it's key that the government takes its time and makes sure that my Manitoba contract is correct. So people are going to be looking through that. And you don't want to rush privatization like we saw with Ajaokuta, or that would lead to issues in the future. So let's get it right. Let's get Manitoba in. Let's make sure the contract is good for Nigeria and is the right contract. So going forward, no one can question it.
So your thoughts, this is just making the process thorough in your view?
Yes.
Anyway, let's move on to some news flow this week. Clearly, there's a lot happening. We're starting with the inflation numbers and Q3 GDP today. Tomorrow, we'll move into the MPC decision. Clearly, the inflation and the GDP numbers are something that will be on the minds of the MPC as they deliberate from today into tomorrow. Your thoughts, first of all, on what is likely to be the outcome of the inflation numbers, given the floods, given the pressure we've seen, liquidity in the banking sector? Your thoughts on where we will see inflation?
I think inflation might tick upwards, and the reason why is food prices. And the CBN governor hinted at this end of last week, that food prices will tick up. And if you look at the floods, which according to NEMA has affected 8 million Nigerians, that's about 5% of our population, that is huge. And then if you look at the disruptions done to the transport networks, a lot of roads were cut off, a lot of bridges were washed out.
Right.
Then if you look at the fuel crisis we're having at the moment, there are fuel queues in most of the major towns. So how are you going to get, and petrol has been sold above the regulated price. Yeah. So all that's going to feed into the food prices going slightly up. Now, if you look at CBN's target is 10% for inflation. Inflation was 11.3% in September. Even if it remains that way or ticks upwards, it's not going to be anywhere near the 10%. So I think MPC will probably have to maintain that 12% because their main aim is to food price stability.
Well, I mean, some will argue that the exchange rate is probably more important to the MPC, and we've seen that pretty stable over the last month or so. In fact, for this year, I think the Naira has gained about 2% or thereabout. Yeah. Your thoughts on any moves we may see around the Naira? Because clearly we're in a good time right now with the oil price where it is, being well over $100 per barrel. But a lot of people talk about the fact that that can change very quickly going into next year. Things like the fiscal cliff and how that is going to be sorted, the possibility of a recession in the US. So, you know, there are quite a few things that should I say, downside, that offer downside risks for the oil price.
Yes, if you look at the currency, it's all gone up 2%. I think it's mainly on the back of a lot of inflows, called the inclusion in the bond index. And if you look at also where the reserves are on a 2-year high. It's still below the Ministry of Finance target of 50 billion. But so they have to probably maintain the continued growth in the reserves up to the end of the year to try and reach that 50 billion. So I think if the CBN is looking at that target set by Ministry of Finance, if you look at and what the CBN governor said on, I think it was on Friday, that there's still some risks to the economy, so we still have to be cautious. And I think the MPC is going to be cautious going into the end of the year and to ensure that we build the reserves so that we can face any downturn. Things like the fiscal cliff, there's uncertainty in the Middle East, those kind of issues. So it's good to build up reserves.
But do you think they may make any moves around the exchange rate itself? Perhaps tightening the use of FX, perhaps something that, we've seen this in the past, there's been aggressive tightening when we thought we had major challenges when oil prices were falling. Of course, the central bank has loosened a bit, things like the open market positions, etc. Do you think we may see that at this stage, or do you think given where oil prices are today, that the MPC will probably leave things as they are, at least in terms of exchange rate policy? I
suspect they'll leave things as they are because the market's pretty tight at the moment. I mean, the only real liquidity is the end of every month when FAC comes in. What MPC's regulations so far this year has kept the market very tight. Banks have very poor liquidity. Interest rates are going up to 25% and upwards. They can't afford to go any further. So any further tightening of the MPC is really going to affect that. And I think the MPC has to take that into account going forward because there's already pressure that interest rates have to come down. You have to loosen the policy and let's start lending to the real economy.
And still staying with the exchange rate discussion, clearly you just mentioned the fact that one of the reasons why we've seen the Naira strong is because we've seen those inflows from foreign investors into our bond market. We've seen our yields come down significantly this year, 200, 300 basis points, depending on where you are on the curve. Do you think that we will see the same interest, the level of interest, given where Nigerian yields are now and given the whole liquidity story across the world? Do you think going into next year, that buffer from the supply of investors looking at our FX market looking to our bond market for the FX market will be there going into next year?
I think it will be, because if you look, but inclusion in the bond index, you have a lot of portfolio investors who basically allocate according to the index. So by inclusion into the index, they're going to allocate automatically to Nigeria. You're going to see those flows coming. Yields have come down, but they're still double digits in terms of Naira. And with the stability of the currency, a lot of investors are happy with that. The Eurobond is at 4%, which is a historical low. If you compare it to countries like Italy, Spain, and Portugal, where they're borrowing at, it's still low, but it's still higher than the US and other places. And with the credit rating agencies and their move to positive in terms of the credit rating, it shows confidence in the economy if reforms are continued. I think that confidence is going to build into the new year.